Okay, good. So GM everyone, and welcome back. Can you guys hear me well? Yes. Okay. Yeah, I got a new microphone, so hopefully the voice should be better. Today, I'm inviting my friend Bao. So ex Skyber Ventures. He was a Web2 turned Web3 VC, and now back to Web2. Still very active in the crypto and Web3 space. I'll let Bao introduce himself and then just jump straight into to his sharing about his point of being an investor and having sit on both sides of the table. So Bao, please go ahead.
Okay. Hello everyone. I'm Bao. So I'm ex partner of Kyber Ventures. We were the investor arm of Kyber Network. So our investor of Outlier, Meme, Mike, Nygaard, and few others successful recent projects. And then after Kyber stop new investment, I turned into Web2 investment and building my own private lending protocol called Felend, using fully homomorphic encryption. So like Leo said, I sat on both sides, investor and also fundraiser. So hopefully today I can share a little bit more insight for you guys about like what RVCs expecting from the projects and how to talk with them. So let me share my screen.
Okay, go ahead.
Okay, wait me a second. Give me a second. So I think I gotta minimize it. Can you guys see my screen now? Okay. Okay, let me full screen it. See whether it's work well or not. Okay, so what we see expect from Web2 projects and how to talk with them. Firstly, let me give you guys a brief about crypto market in Q2 2025 and the current narratives. Maybe you guys like have a feeling about it. The deal volume and deal value keep decreasing. So in Q2 2025, it's decreased more than near 60% compared to previous quarter, and hit the record low since Q4 2020. Silent market. Key focus areas is still infrastructure, deepened AI-linked projects, and some projects related to DeFi and stablecoins. About geography, majority of the deals still from US, with 45% of those. Also, investor who are actively deploying also from the West, majorly. US and Europe. Asian indices are pretty silent now because their returns is not so good, so they have not much money to recycle, and also it's very hard for them to raise a new fund because the current performance is not good as their LPs expectation. In total, VCs raised 1.8 billion in 21 new funds from institutional LPs, but most of them still in the US. About the narrative in the market now, 5 things I see pretty clear at the moment is the due diligence is more and more, how to say, more and more thorough. The spray and pray approach is actually went away. Before VCs, they can invest like 5, 8, 10 projects per month for the active guys like Animal Cars, like few others guys like Hashkey or some of US guy like even like Multicoin or Polychain. But now a fund, normally they only invest in 1 or 2 projects a month, or even less than that, 1 or 2 projects a quarter. Also, they care more about the business model and sustainability of the project rather than just token price fluctuation. Infrastructure resistant, they still want to invest in the infrastructure or application that can scale into like multi-million users and have like good product market fit and generate revenue in the long term. So stablecoins, perp, and also others infrastructures are still very favored by the VCs. Also, like regulatory clarity, they tend to invest in the projects that have that follow the new regulation of different jurisdictions, especially in some space like DeFi, RWA, and stablecoin. And last, from hype to durability, the one I mentioned before, they really care about the projects that can last for long, because VCs, they have a long vesting periods, normally like 2 to 3 years, sometimes 4 or 5 years. So they will care about the projects that have long-term and sustainable business model. And once they get all the token invested or all the equities vested, they have something sellable. And what are VCs look for in a Web3 startup? First one, everyone, including me, we look in the team first. They like the team who demonstrate the ability to to build and also like commercialize their projects, and have a good skill set and track record that you have built before in both Web3 or non-Web3. Sorry. And also, the team has strong commitment, commit to deliver things and stay long with the projects, rather than some guys that just raise money and go away. Which is pretty like not. I don't mean normal, but we can see it quite a lot in especially in the bull run. And now we see a drama of sharpening. One of this very typical use case of that. So for my friends in VCs, they pretend to invest in projects that they know the founders and the founding team very well, and who are the ones that really have strong commitment and really like build something, rather than just like raising money and issue token and do nothing more. Second, about product market fit. So very clear. Why do you use this projects? Why you build this product, and why blockchain? Also, focus on like user retention. It's not a hype. It's not a short narrative. It should be something can last long, at least for a couple of years. So that the product market fit that the VCs they are looking for at the moment, and it solve a costly pain point or a pain point of a lot of users. So that about the product. And third is about differentiation. So VCs, they like the projects that have proprietary IPs or technologies that only you guys have, or based on the very like deep research, or based on a very deep knowledge of you guys about something, and then you convert it into products that solve the pain points of a large scale of users. Second, like strong and engaged community. So blockchain still very like retail focused, and you gotta have a strong community to support you, to accompany with you in the long run, and sustainable and clear uh, monetization strategies. So how do you make money? How you make money sustainably, and how your token play in a role in that business model if you raise token and if you raise equity. So how you can like continuously generate cash flow, revenue, and then profit, and can help them to exit in the future. So and about the token, if you raise token, they care about tokenomics and token utilities. Token must have real and verifiable utility within the ecosystem. If the token is not really related to anything in the governance or revenue distribution or like value distribution, value capture, so the investor they don't see the value of that. So in the long term, even if you have the hype at the start, but in the long term, if the token doesn't really capture the value of the product or value of users, so in a VC point of view, it won't be sustainable, and we don't like that. Also, it balance in the inflation. Sorry, I got caught today. Balanced with inflation and treasury management, inflationary, deflationary purpose of using the tokens, it must be balanced, and it must value both teams and investor and also the community. So that four main pillars of this when we look into our Web3 startup. Sorry, guys. So would be a few minutes. Hey, sorry. Very sorry. Yeah, and next, how to structure your pitch and how to talk with the investor. First, tell them about your visions. Majority of the project, especially at your stage, visions is one of the most visible things, tangible things you can share with the investor. Make them buy in your idea, make them believe in your idea, your projects, and also believe in yourself. And about the problems and solution, clearly define the pain point and how you build a projects that will solve it. Show them the traction and the roadmap, what you have achieved so far, and what you're going to do in the futures, what the product look like in the futures, what the users profile, what the users acquisition strategies and user retention strategy too, and demonstrate the ability of execution of the team. In a short time, you can really ship the product, enhance it, build it, and you have a clear roadmap for that. And in short time, you can get a great attention and get the mind share of the communities. You play an important role in an ecosystem. That's very important to the investor, because if they see you guys are outstanding, only if they see you guys very outstanding, they can invest money. If you have no differentiation, it's very hard for the VCs to pick you guys in a. Sorry, very sorry, you guys. So because VCs, I have like 1,000 pitch every quarter, like 100 pitch a month. So if you don't see, don't show them really something doing different, something really impressive. So it's very, very hard for them, for you guys to get their attention and make them have the make a quick decision. And be transparent about everything, about tech, about team, about the roadmap, and the solution of your projects now. Because receiving money is committing liable, like it's liability, not as Joe said. When you receive money from VCs, you have liability to deliver what you have promised before. If you can't deliver it in the contract, in the SAF, there will be a lot of clause that they can force you, or they can even issue you in the future. Common red flags when you do the pitch. So no core use case, or your project, your product don't really solve big problems, or is not a completed solution for something. For tokenomics or poor business model, you don't have a good business model which really capture the values of the users. Users don't pay, or token have like no utilities, no roles, and in your business model. So that's one of the red flag. Third is weak execution. Because Web3 is evolving very fast. Every trend, everything is in a very short term. So you have to deliver things very quickly, ship it to the users, and really capture the right time. So if you have weak execution, it will be some of the red flag for VCs, because they receive a lot of promise. If you just promise and it lack of execution, so sorry. We just and they can't believe in you guys. They will see a lot of execution risks in the future. So if team can do the thing, so why do I have to put money in you guys? Fourth thing is no market validation. Now most of the VC, they require an MVP and have the feedback and have the traction or small traction from users, rather than just present an ideas for them. If there is nothing on the table, I think it's near impossible to raise money now. And if you raise money for something is hype in the market, and you raise and you build that just because of the hype, it's not working now. Now, majority of the VCs, they are a little bit more long term. They a little bit less narrative driven. They still, but less than before. If you see a trend in the market and like someone is building a meme called Launchpad, and I build a meme called Launchpad in a new chain with no differentiation, no like unique selling point, no chance you can raise money from VC. So some of the metrics that matter for VCs, if you are an early stage project or like pre-product, pre-market fit, it's harder, but at least you can show them you have an MVP and you have some users even on testnet. You show them number of active wallets and number of active users, and also retention cohort by week or by month. You can show them in the community engagement. So how many people in your different social channel, also the engagement of the users, feedback of those, and deployment velocity. You can ship, you can deliver things very fast, enhance the product very fast, and every next version is like a much better version of the previous one. So if you are early projects, you should show the investor shows us some of the, those there that in those areas. And if you're on the growth stage, like the product is out, you have the real traction, you just show them the volume, the TVL, revenue if you have, and you show them a good trend, also like stability of those. You should raise money when the traction and the trend of TVL users or revenue is up. If it's flat or it's already going down, so it's much tougher in fundraising. GUM on MAU ratio, that the users, they use the product frequently and have a strong stickiness with your product. So it's very important ratio that you should show them besides the financial traction, and you show them the ecosystem integration. You have partnered with different foundation, different projects within the ecosystem, or more than that. So that show your product really value to the ecosystem, and your partners are really appreciated, and they want to work with you guys. You play an important role in an ecosystem. That's very important if your product is already out and start having traction. Sorry. And in reality, now VCs they're much more careful, and most of them they don't just deploy money at once. Maybe some of the guys, they deploy on milestone base. Even like once you reach this and that milestone, they will deploy the money. And to fund the projects, at the start, I think grants, ecosystem grants, still one of the most reliable and approachable sources for you guys. VCs DD cycles is longer and longer. Previously, when I enter in the market, in the bull market, sometimes I have like a couple of weeks to finish everything before the project close around. Everyone was formal, but now VCs, they spend at least 6 to 12 months to do the due diligence, or just wait for others, wait for someone to lead, wait for some other one to like really get into the round, and the rounds like at least I have fill, and then I can fill the gaps, something like that. And it required more transparency and maturity, and your financial planning about like corporate like project governance, how you use money, how you prove them that money is real, is used in the right purpose. And one of the successful use case that I helped them to raise in this year is also is a Vietnamese project called Harmonic Finance. They didn't raise like a very big round, but have successfully raised money from good investor that can really help them to grow their TVL, grow their traction, and contribute them quite a lot in trading strategies. I mean, Harmonic Finance is they create a vault to offer high and secure yields to both institution and retail users by a top-notch trading strategies like arbitrage, and not arbitrage, but they maximize and have strategies to give users like 10 or 20% higher yield from similar product in the market. They have very strong traction. They grow their TVLs like from 0 to now 15 million in a couple of months, and it's grow very sustainable. It's all organic. It's very sustainable. We see a very good trend, and they have a very strong presence in hyperliquid ecosystem. Have them raise money from some hedge fund, and also like a liquid focus VC. So they closed around like 1.5 million at pretty good valuation, and all of the team and also the investor very happy about the investment, and they're gonna go to G this quarter. So I help them a little bit with the fundraising, so I know why they can raise and how they can successfully raise money from the investor. Um, I think those are the things that you have to prepare to like really before you will raise the round. And raising money is not just like receiving money. It's build a relationship between founder and VCs. You should share the alignment between you guys and the fund. Choose. I think this market is someone like tell me that they will need money, but it's not just that. To raise money, you have to choose the right investor. You know their investment strategy, you know their value add, and you know their philosophy. And if they share something the same with you guys, it's much easier to talk with them and build a long-term relationship with them rather than just receive money. And build data-driven trust, show the traction, show the operation metrics that verifiable, that auditable. Be more mature in the project governance. Make sure everything is organized. Make sure money is used in the right purposes, and you have like sustainable growth. You deliver a durable, valuable, and sustainable projects to users, and VCs will have the benefit in long term from what you are building. Yeah. So that the things I want to share today. Sorry guys, because I got caught a lot and didn't really can deliver it in a very fluent way. Like time for Q&A. Feel free to ask me any questions related to like Web2 VCs, fundraising, and anything else you want to discuss. Happy to answer.
Hey, thanks, man. Sorry, I didn't know you were sick, but thanks for taking the time today and share with us. I think very insightful. So actually, Harmonix Finance is a spread out portfolio company, and the founder is actually an early member. I think we all met each other, I think, a few years back, me, Bao, and Frank. And so we actually rolled one of the first check into Harmonix as a group, right? There was me and a couple other people within Squared Out. I think we put in like 10K at I think 5 mil.
Yeah, very good. They're the most recent round 15.
Yeah, so it's already doing pretty well, right? Looking forward for November when they TGE. But beside the point, I just wanted to move the conversation over a bit to maybe Q&A. I think it's great having Bao here. He's been on both sides. He's been on the investor side, been on the fundraising side. He's been in Web2, and now he's doing Web3 stuff. So yeah, any questions, any concern, anything that you're unsure about, you can raise today. Go ahead, anyone? Yeah, go ahead.
Okay. So yeah, really thank you for your session today. It's really insightful for me. And I just have some kind of I don't know, it's somewhat of a personal question. So you don't need to answer if you don't want to. But in your, for example, with your VC, do you guys, or did you guys invest in any crypto project in the last 2 years? And if you do, how did that turn out?
Okay, interesting questions. So I left Kyber late 2023. After Lloyd, he decided to stop new investment. So in the last 2 years, almost no investment. But I have some projects to raise and also do some personal investment. So personal investment, I do invest in late round of some projects like Babylon. Also, anything else? I have chance to invest in our projects called Treat. It's like a meme projects by by Shiba Inu team, but it didn't go well. Then Babylon investments went pretty well. I can realize partially a part of that. I invested in another project called Blade Games, in which invested by few notable VCs like Bybit and GLF and few others. But the team it didn't do well, but I have a good relationship with the team, and they told me because you are good friends, so we give you the refund. Luckily, I got that. And yeah, those are my personal investment. About in my investment when I did in the VCs, I made 15. I think only 3 out of those did well. The rest die or just we didn't receive much from, we didn't realize much from our investment. Overall, we still make money because the deal we have good returns. It almost cover all the investment.
Okay. Because one thing that I'm really curious with current VCs market and venture market, venture capital market is like before when the liquidity environment is easy, we got VCs spray and pray everywhere, right? They just need about 5% and 10%. I don't know, just 5% of hit rate to win big. But now, as you also state in your slide, is now instead of spray and pray, VCs tend to do more careful due diligence.
Yeah, much more careful, and they have to have a very high conviction about the project before they put money in.
So basically, that mean I don't know. They hit rate must went up like a lot in order to success.
I'm not sure because the recent new investment, I think this year market pretty silent. So number of deals, new counts, and deal volume is decreased. I think more than half compared to last year. And this year, like if you're VCs, you put money in the projects, you can expect they can TG. I think after a year or even more than that. So I think VCs, they haven't like really realized anything that they invested this year. But I can give you some more insight about the VCs that are still running now, because I know quite a lot of LPs in the market. So overall, I think more than 60% of VCs lost. Out of those, I think 30% lost more than I think 60-70% of the fund they raised. Only 10% of VC really can make money, and about like 20% of VCs they can pay back to the LPs the money that they invested. Most are like around 1, and only 10% that can return more money than committed money from LPs. Out of those, I think less than 5% of those can really outperform BTC or ETH. And they must have a very big win to, to have those performance. I mean here, all I mean is tier 1, tier 2, or tier 3, at least tier 3 with VC in the market. I don't mean about like a group of small people, they put money together and call them a VCs. Like the VCs here in my network, I think at least they have a 20 mil AUM.
Fair enough. So I think the pool investment and stuff like that, I guess not really VC, more like syndicate, right?
Yep.
Yeah. Cool. Kung, any other question? Any follow up?
No, I'm good. Thank you.
Okay, so more like a personal curiosity. Got it. Yes, Mark.
I got a question, Bob. What's your? Actually, I got two questions for you. First question is, what's your advice to first-time founders that might be in the market that are looking to get investor meetings booked? I know that reaching out to investors to get those first meetings booked can be very difficult. A lot of times, from my experience, getting investor meetings most of the time came through an accelerator center where we kind of had a bridge to an established investor network, or from warm introductions. I know cold outreach is a lot more difficult. So what would your advice be to first-time founders that are looking to get some meetings on the books?
Okay. I think first, if in your network you have personal relationship or you have like mutual friends with VCs people, that's the best way. And it should be a relationship with them, not just for raising money. Have a relationship with them and make them trust in you guys, in the team first. And it's gonna take a bit of time, like a few months or even a few years. That's very important. And if you really want to reach out to a large group of VCs, if you join the crypto events, you will always see the VCs event. You can go there, hang out with them, find those people in the event, and try to give them like good elevator pitch. And if they are impressed enough, they will follow up and like have a meeting with you or for the meeting with you in the futures. And not just go through the accelerator and incubator, you can join some kind of like pitching day, others kind of hackathon, and the program like this. Because when I was in VCs, I always looking for these program to really like find the good founders.
Yeah, I mean, it's distribution channels, deal flow for you guys, so it makes total sense. My second question is around fundraising preparation. So leading up to go through the motion of running a proper fundraise, what advice would you give to founders that would be best practices going into that?
Yeah, I think firstly, you define strategies. There are two stages when you raise fund. First one, you raise at early stage. When you finish the MVPs or deliver testnet and start having traction in communities or like feedback from users or like some like mind share, some attention from the from some type of ecosystem, and you can start the fundraising before the products really in production. So if you raise in early stage, make sure you have a good operation metrics that I shared before, and you have good relationship with the ecosystem, with the like L1 you'll be on, or the ecosystem you're working with them, and have good have good recognition or like mind share from those, and it will help you to catch the attention from the VCs. And if you raise in on growth stage, everything is about number, what the traction, what the TVL, how it look like, it is how fast is growing, how sustainable is that, what about the user retention, day 1, day 5, day 1, day 7, day 30 something. So different stage, you gotta tell different story, and you have different strategy for that.
Thank you.
Cool. Other questions? Yeah, go ahead, Anh.
Yeah. Firstly, thank you about for your effort today. I got sick too, so I feel you. I have a follow-up question. I mean the follow-up with the first founder question by Mark. So from the investor point of view, how do you determine if first founder is a good one? Because for the first founder, they barely have a good reputation or a good relationship. So what factors you will look into for the first founder?
You mean the first time founder?
Yeah. Sorry, first time founder.
Okay. So when I look into your first time founder, I really look into the ability to execute everything, ability to ship the product, and ability to engage with the communities. Transparency, integrity. Of course, before we invest in you, we have to do some background check and also reference check. Like who you work before, what your achievements, and what the track record in your previous company, something like that. But it's more about the ability of execution, and also how do you ship not just the tech but also the business. Yeah, and of course integrity is a must.
Yeah, so maybe let me add to that, right? I think we talk about this a lot during the program, but I think the key concern that I have with a lot of people in the early days is because we have a lot of first-time founders and first-time builders in this program, is that can you deliver? Can you execute? Can you even describe what you have done? And I think so far everyone's done a pretty good job. At least get to the point, either prototyping, MVP, and or able to at least elaborate somewhat of what they've done. I think the next challenge is how do you take that to the next level, right? The next level being that can you just turn it up anywhere? Let's say you go to a meeting, you go to a party, and then you meet someone. It's oh, what do you do? Can you in 1 to 3 minutes explain clearly what you do? Right. So that I think is the next challenge, and that's something I want to try tomorrow. So tomorrow we have a pitch, right? And then what I'm going to do, I'm going to turn on a timer, and I'm going to give you 5 minutes. So within 5 minutes, you need to be able to finish the pitch from beginning to end, right? Anything longer than 5 minutes, we're going to cut. So that basically is the homework for today. So go home, right? Get ready for tomorrow. Because that's going to be a fun game tomorrow.
Yeah, especially when you talk to Western VCs, they're very visionary. You gotta really sell the story to them. What's your vision? How can you achieve that? And how can you change the world? Something like that. So Western VCs, they're more like that. They're more visionary. They're more futuristic. But Asian VCs is a little bit different. They care more about action. They care more about what you have done, or what you have delivered. So be just carefully about the VCs you talk to, and will understand about their portfolio and their investment strategies. So if you talk to existing Z and you your visions, you only want to build something with couple of 100 million TVL, DeFi projects, I think you can never get investment from those. Never from them. They want something to build the next Hyperliquid or something like that.
Yep.
Okay, thank you.
Other questions? Okay, if nobody's asking, maybe I just ask one more question. I'll let you go because I think you need to rest as well. So you have like one final advice for founders who are going out and raise today? What would it be?
I think before really do the fundraising, you have to, like you mentioned before, do a very good homework before that. First one, build a good relationship with the investor. Second, really deliver something and have something in your hand that show other promising projects that can make the VC 100 times returns. So I think those are the keys. Make the guys trust you guys first. Trust is the first things, and second is show them that you have ability to do something big and do something that can give them like 50, 100 times returns.
So what would that follow question, right? So what would that like delivery be? Like, could it be like a prototype that like they can use, or like numbers that they can see? Like, let's say Mark company, yeah, like doing a DPIN company, right? So and of course, like, you know, they have devices over the city of Da Nang, so they cannot just like take people there. But can they show that like traction product? What would be something that VC are interested in?
Or this is they were interested in like steep growth traction. So in a couple of months, you have ability to grow your business like a few times, like 5 times, 10 times in a couple of months, and you can potentially grow like 100 times more from the current scale. They really want to see that, and it should be sustainable. And like you said, so if you build DPIN projects, so see the number, how much how many like machines that you have, and the trend of increasing, and also like both supply and demand side, how many of customer, how long they use, how much they pay, something like that. Some proven real operation like metrics. So make them believe more in the product, and not just like telling them we build great tech and we'll let you see the traction. If you see real traction, it's much more convincing rather than just selling the story.
There you go, Mark. You know what else to add to the deck? All right. So if there's no other question, I think we should end early today. So Bao can go get some rest. Again, everyone, please give Bao maybe like a virtual round of applause. User icon. He's bracing the cold and like basically coughing halfway through the deck and everything to share with us today. So thank you, Bao. I don't know you in Da Nang next week. So next week we have 6 teams who's going to be presenting. I think most of these guys are going to be in Da Nang as well. So I hope you get well by then and maybe come out, hang with us for a day. And yeah, let meet up with some of these guys. Maybe some of these could be your future clients. I don't know, but I think at least like I think Mark and his team like getting ready to raise. LFG's Wu-Tang is getting ready to TGE. It's a alright chain affiliate project. I'll send you some links later, but hopefully some of these guys can be your future clients as well. So do come out. You're around. Yeah.
So So personally, I'm advising like 1 or 2 projects at the same time about fundraising. I can help you guys with reviewing your fundraising materials, including deck, data room, and etc. Have you outreach to the VCs that I might feel they're suitable for you guys, and also do the follow up, make the deal happen if someone really interested. I have Harmonic to raise. I have a few others guys in Vietnam to raise. Sorry, I'm a little bit sick today, so my brain is not working very well. I have Harmonics. I have a few others guys. So in Vietnam, I have one other guys, Eric from so the Aptos. Sorry. Analyst, yes, I'm in finance to raise a little bit. So in Vietnam, and also for some few others projects, I have them. Even some guys, I have them to raise millions. So feel free to reach out to me to if you need assistance in when you do fundraising.
Right. I think that's it for today. Thanks everyone for turning up. I think we actually have one of the crowded.
Sorry. Yeah. Thanks a lot for your time. Really sorry because I'm a little bit sick today, and feel free to give me further questions. Happy to support.
Yep. All right. So thank you everyone. Thanks for tuning in today. And remember, we have a demo pitch tomorrow. If you want to pitch the demo day, you have to be there tomorrow. So that is my last challenge for you. So we can pick the top 6 for demo day. So be there tomorrow. And once again, thanks, Bao. Hope to see you, if not in Da Nang, then Hanoi soon. I should be traveling soon. So yeah.
Sure. Okay. Looking forward to seeing you guys. Yeah. Bye.
All right. Let me turn off recording, and we good. All right. Bye, guys. Have a good evening. Bye bye. See you tomorrow.